Hello friends, today we will discuss about the accounting for limited liability partnerships. Under limited liability partnerships, we will solve one sum. You have to take PDF. Already you got the printout of the limited liability partnership, and now in this will print out our notes, problem number one that we are going to learn today. Open your PDF and see the what kind of problem is there. Now, if you see this particular problem, now we will discuss the problem number one. Problem number one. A, B, and C were partners sharing profits and losses as 3 to 2 to 1. Following is the balance sheet of A, B, and C on 31st 3 2022. Liability side: A's capital 1,45,500, B's capital 87,000, C's capital 37,500, creditors 24,000. Asset side: land and building 1,44,000, machinery 42,000, stock 18,000, bills receivable 36,000, debtors 54,000. Total of the both the side 2,94,000. The partners decided to convert the business into a LLP on 31st March 2022 on the following terms. Number one, LLP, which consists of A, B, and C as partners, contributes rupees 1,50,000 each. The company took over all assets except stock, which was taken over by A for 15,000 and assumed all the liabilities. It also agreed to pay rupees 45,000 for goodwill, and the purchase consideration was paid in cash. Prepare realization account, partners capital account, cash or bank account, and general entries in the books of LLP and statement of assets and liabilities. Now, friends, if you see that there are number of things in this problem they asked to prepare. Now, this question belong to Mumbai University. This question was asked for 20 marks. Now, if you see that in this particular sum, if these particular partners are there, there are three partners. There are total three partners: partner A, partner B, and partner C. These all partners are decided to convert their business into limited liability partnership. It means partnership form the profit sharing ratio 3 is to 2 is to 2, and they decided to convert their business into partnership LLP. Previously, it was a partnership firm under 1932 Act. Now, they want to convert this partnership into limited liability partnership 2008 Act. And what we have to prepare? We have to prepare realization account, partners capital account, cash or bank account, general entries in the books of LLP, and statement of assets and liability. It means we have to prepare the balance sheet also. So before that, purchase consideration that we have to find out, because they says that a company took over the all assets and assume all liabilities also. It means we have to find out the purchase consideration by using the net payment method. Now let us discuss the in the books of ABC calculation of the purchase consideration. Friends, we already studied in amalgamation of the companies how to find out the purchase consideration by using the net asset method, and same things we have to consider whenever the we have to find out the purchase consideration in the LLP. First of all, we have to consider all asset taken over at agreed value or book value. If you see that there are number of assets are mentioned in our problem, there are number of assets are mentioned. Now, if you see these assets are land and building, machinery, stock, bill receivable, and debtors. These are the assets are there. And this says that company took over all asset except stock. Means stock cannot taken over, all asset taken over. It means all asset taken over at book value. So first we consider the land and building. The first asset we have to consider land and building, and their value rupees 1 lakh 14 lakh 40,000, whatever is mentioned, the same value we have to consider as a book value. Machinery 42,000, bill receivable 36,000, and debtors 54,000. Everything we have to put here. So here we have to put all the assets. Machinery amount 42,000, bill receivable 36,000, debtors 54,000. All amounts we recorded, whatever amount is, only we will not consider the stock, but they are provided. It is also agreed to pay 45,000 for goodwill. So we have to consider the goodwill while calculating the our purchase consideration. The goodwill rupees 45,000. We have to do the total for this all assets. The total will be 3 lakh 21,000. From this 3 lakh 21,000, we have to deduct the external liabilities. In our problem, external liability only extra 20, 40, 24,000 is a creditor is there. And this says that all liability also taken over. The creditor is also taken over. Rupees 24,000. So we have to write here creditors value 24,000. From total assets, we will deduct the total liabilities. Rest of the value will be considered as a purchase consideration. The 3,21,000 minus 24,000, the remaining value 2,97,000. We prepare and we got 2,97,000 as a purchase consideration. Okay, now what we have to do? Now we have to move further and see the what kinds of ledgers we have to prepare. This is that you have to prepare the realization account, partners capital account, and cash or bank account. So we have to start preparing realization account. Then after that, we have to prepare partners capital account. There are three partner A, B, and C. This is a debit side, again credit side, A, B, and C. This particular partners capital account we will prepare relation account, and one more account we have to prepare, that is cash or bank account. So we prepare the cash or bank account also. So cash or bank account ledger also we draw. Now whenever we have to prepare the relation account, you know that we studied the amalgamation or whatever assets are there at book value, all assets we have to debit it to the relation account, and all liabilities we have to credit it. So whatever assets are there that we have to debit it. What kind of asset? All land and building, machinery, stock, bill receivable, and debtors. And this particular book value we have to record. Those all assets we have to record here: land and building, machinery, stock, debt, bill receivable, and debtors. All assets we recorded. After that, liability also we have to transfer to the relation account. Liability includes only one liability is there, creditors. Creditors also we recorded in our relation account credit side. It means in our this particular balance sheet, assets items are recorded, liability also recorded. Capital balances A, B, C. These capital balances we will transfer to partners capital account. Where we will transfer the capital balances? Partners capital account. So we prepared this partners capital account, and credit side we have to record their balance by balance brought down. Is capital 1,45,500, B's capital 87,000, and C's capital 37,500. These all items partners capital account credit side we have to record by balance brought down. Then after that, this is that stock not taken over. If it is taken over by the A 15,000. So this particular stock it is not taken over. This stock not taken over. So what we have to do? So it is taken over by the A. So this particular stock 18,000. The value they taken over for rupees 15,000. So we have to record this taken over credit side by stock taken over. A's capital rupees 15,000. Then after that, purchase consideration we are already calculated, and purchase consideration value recorded 2,97,000. This particular value also recorded in our relation account credit side by LLP new firm, and there we have to put the values. We have to put the value of the purchase consideration. So stock, it is taken over by the A. So we have to put A's capital stock value 15,000. It is taken over at rupees 15,000, and the this particular purchase consideration value we have to show relation account credit side because new company take over the business. Therefore, this particular purchase consideration we have to record realization account credit side. Now this stock A's capital, it is recorded in credit side of the relation account. The same things we have to record it partners capital account debit side. So we have to show to realization, and we have to record it is taken over by the A. The A's column we have to put only 15,000. Clear? Then after that, after recording the entry, now we have to close. We have to close the before closing this LLP account we are not recorded, but we have to close this relation account. The credit side value 3,36,000 this total, and the debit side value it is with less value compared to credit side. The credit total minus debit total, rest of the value will be considered as a profit on realization, and it is transferred to partners capital account. The amount will be 42,000. As you know that they have their profit sharing ratio 3 is to 2 is to 2. So this particular profit 42,000 it will be transferred to the partners capital account. It is distributed among the partners as per their profit sharing ratio, that is 3 is to 2 is to 2. So we have to record this particular value credit side of the partners capital account by realization, and it is distributed the profit among the partners. Total value was 42,000 profit. This particular profit This particular profit, we distribute it and we record it partners capital account credit side by realization 18,000, 12,000, 12,000. Then after that, we recorded these things. Now, what we have to do, we have to see the problem. Is there any record? Is there any particular? See that what they says LLP, which consists of the ABC partner, contribute 1,50,000 each. So each partner under LLP, they contributed 1,50,000 each. So this particular 1,50,000 each, they contributed. So this particular contribution we have to show. So where we have to show. So it is recorded. This particular LLP's purchase consideration we recorded here, and the contribution we have to show partners capital account. So see that we have to close the partner cash account here. Total here we recorded 2,97,000 as a purchase consideration, and partners capital account also we have to close, and whatever balancing figure will come, it will be transferred to the cash or bank account, that is rupees 1,48,599,49,500, and on that basis we have to prepare the water balancing figure is there, it is transferred to the partners capital account. Now we have to move to the balance sheet statement of assets and liabilities. First item, contribution and liabilities. Contribution received, because I already informed that all partners brought 1,50,000 each. So this 1,50,000, where we will record it? It is recorded statement of assets and liability. 1,50,000 into 3. The total amount will be 4,50,000. There is no any kind of reserves and surplus, so it is nil. Then creditors are available, that we have to show 24,000. You know that, as you know that whenever we have to write the balance sheet, we always consider the purchase considerations items. So under purchase consideration, the value of the creditors rupees 24,000. The same items we have to consider while preparing the balance sheet. Then after that, we have to put the total. Then fixed assets, we have to record it 2,31,000. How you will get this figure? So if you see that total value 3,21,000 is there. In this particular value, we have what kinds of items are there? The fixed gross fixed asset. So if you see that there are various things we recorded, that is land and building, machinery, and goodwill. This 2,31,000. What about the partners capital? We have to prepare as a note to account. In that, each partner has brought 1,50,000. The total was 4,50,000. These are the items we recorded here. 4,50,000, creditors value 24,000, and fixed asset 2,31,000. We prepare note to account such a way. Then debtors and trade receivable, how we will record it? So we have to put the debtors value 54,000, bill receivable value 36,000, total 90,000. And this 90,000 we have to show 90,000. Then after that, cash and cash equivalent balance also we have to record it. In that, if you see that cash received 4,50,000, paid to vendor, it is a purchase consideration. Total cash was 4,50,000. Now 4,50,000 it was there from this 4,50,000. 4,50,000 how you will get whatever ABC partner provided the 4,50,000 as a contribution. This 4,50,000 we recorded as a cash received. From this we have to deduct the purchase consideration value. Less paid to vendor 2,97,000. Rest of the value 1,53,000 and 1,53,000 we have to show in our balance sheet. Uh, Stock, there is no stock. Loan, there is no loan. Investment, we have to put nil. Whatever amount is there, that we have to consider. Then after that, we have to close the balance sheet. How we will close? The 4,74,000 is this is the contribution and liability, and assets total also same 4,74,000. If you see that this particular assets and liability, in that, if you see that the contribution and liability, contribution received, surplus, and creditors and bills, trade payable, whatever is there, that we prepare their note to account. On that basis we prepare. So I hope you understood this particular part of the problem, and there is no problem for you to solve this particular sum in your notebook. If it is any kind of difficulty is there, you can share with the WhatsApp group. I will explain. I hope you understood the problem number 1. First of all, you have to read the problem and then you have to solve it in your notebook. Okay, so keep watching. We will discuss the next problem in our next lecture or next